Hello and welcome, as it is the completion of the 22nd day of July 2020. My name is Derek. This is the Money Charts channel, where, like always, all bets, trades, and of the like, well, that's within each's own risk and their own reward. In this video, going to be going over silver, gold, and I meant to do the gold to silver ratio yesterday, and I forgot it. I'm going to try not to forget it in this one, and as well, Major League Baseball back in action, and I'm going to go over just a level of how I would be looking to wager at the start of the season and a play within that meta game thinking on for Friday night's action between the Houston Astros and the Seattle Mariners. Well, it's going to be over 7.5 runs, but I'll explain why. There's a pick right there, over 7.5 runs. Okay, there we go. All bets, trades. There's a bet right there. You can make trades with silver. But first update, I mentioned yesterday about silver, which stated was delivered, but wasn't, and it actually was. So good news, bad news. The bad news is I didn't sign for it. They just stuck it in my mailbox at the very end of the road, which shouldn't be done. And it said signature required amongst the statement. But the good news is the 17.5 ounces of silver is now in my possession. If you don't own it, if you don't hold it, you don't own it. And quite frankly, I'm now been able to hold it for the first time. Okay then. So that is awesome, as I've been able to delete the claim and let Silver Gold Bull know via that as well. And let's get started within today's analysis. This is the 15-minute term time frame for silver. So this is going back to pretty much the start of the week, where silver was under $20 and now at $23, up 15% pretty much week to date. We'll go through multiple time frames, get the weekly numbers when we get to it. But how does a market react to a certain move? And overall, from this general one leg higher, it has been in this sideways consolidation pattern, while now spending the majority of the most recent time at the upper end of the range. And there's been a lot of movement and a lot of action and volatility within such, as it was yesterday at around 1830 hours or 6:30 p.m. New York time, UTC -4. And the rally got up to 9 p.m. Eastern time, 1 a.m. London or UTC time out there. I'm sure. I don't know. I'm guessing London and UTC are the same. But with that being said, $23 and change, and it has this nice little correctionary price move, but it most certainly didn't hold, as the buyers came in with full aggression this morning at 5 a.m. and they did so up until about 8, bringing the price piercing above the previous high and then higher lowing and supporting the 18 average spectacularly within the 4-cell wave bar down at the 8 o'clock hour, and thus hitting a bottom in here, supporting this area of resistance in here, but most importantly supporting at the 18 average of lows within the must-hold area. That's wherever the 18 average of lows is on any move on the pullback, that's generally what I'm looking for. And now the excitation of it early today at noon, and then it makes a rally again, and another retest of this multiple, like 4x test area. And you almost say it's 5x now, but you have 1, 2, and the whole general area 3, and then 4, and this is why almost like 5 from this high back to this low. But after spending this little time in here, it's showing to me as if this move is ready to, it's not over and it's going to continue on moving forward. So that is the viewing on such on the 15-minute chart. On the hourly, tremendous support being found on the 18 average of lows here as well. An attempt to exit out above this, the same thing at 8, but correcting well and then holding and staying above this rising 18 average of lows. A very, very setup as we move into that of Thursday. Let's go to the 3-hour term time frame, just a straight up move. You could say the market's overextended, but nowhere near as overextended as it was on the 18 stamp on July 21st. As it was well accelerating from the 18 average. We last touched the 18 average like 4 periods ago. So to me, that's not that overextended. It's telling me that it could easily continue on a spectacular break. And if we do such, and we have another leg after such a fantastic first one, The sky's the limit. $26 could be before Friday night or before the end of the weekend. Daily term, and the keywords could be, but the setup for such is just magnificent. Okay, resistance in here. Nice. We have this previous level of August, September, clear break. There's not much more to say else about that. We had all of this sideways consolidation in here from all of June basically. Then we started to show strength at the 18 average of highs to start the month of July, and well, we show strength at the highs and had yada yada yada. Okay, it did what it did. So be it. It was lucky. Some people say technical analysis doesn't work, and maybe they're right, maybe they're wrong. Weekly term time frame, and yeah, one of the things about technical analysis I talk about is failed move, fast moves, yada yada again. Seinfeld term is a yada yada. I use that all the time. And if you've watched my videos, you already know that. Okay. All the time. Many times you watch my videos. And most people here do. I don't think anyone's watching my videos for the first, second, or third time. But if you are, welcome to the channel. So we had this level of key support that was in play for the end of 2018, 2019. And I know you can say all you want about fundamentals, but whether you look at, or even with the fundamentals, for it to rebound as well as it is and then to recapture the highs is just magnificent. But from this failed move, it quickly gets back into the 18, breaks above it, and then when you break the key level of support, you expect a concise breakout. It's having a concise breakout right now. Monthly chart. And yeah, for the week, I just want to say the weekly percent, as I was mentioning, 16.8% right now. And for the month of July, it's up 25 almost. But we're now at levels not seen since like 2013. So we're at 7-year highs. We're at highs seen back here in September of 2011, as well as January of 1980. The amount of time silver has spent north of 23 in its entire history is pretty much what we see here. All of this collectively, non-stop, every second of the moment. And we have a little bit here. And now we're starting to see it again, I guess. So we're entering into, it's not really uncharted territories, but barely chartered territories, as another way of putting it. And it's also a 3x of previous high. A 3x hit, or yeah. And the more often you test support, the more likely it is you break it. And when you break big levels of often tested resistance and supports, then you get clear, concise moves, as just previously shown on the shorter term time frames. But as it goes now, I'm going to be looking for this next level of resistance, a statement, to be coming up towards the 27, 28 to 32 level. And then we take a look at this on the quarterly, and it's been this long sideways consolidation that this is attempt number 3 to get this bull market going. Attempt number 1 occurring in here. Attempt number 2 was last year, and it's just reattempting what it was trying to do before. So you can say this is just one big attempt either way. It's now actually darn near trying to do it now. Quarterly term time frame, as now we look back at 1980. And for the first time since back in here, it's noticeably well above the 18 average of highs, noticeably above. And as it's almost, you look at this back in here, this is a spot where beforehand we were after one heck of a long consolidation pattern. Market had this leg higher back to the 1980 highs, and then it spent the vast majority of its time inside and below the 18 average, and every time it went above it was an attempt to end the downtrend, turn it to neutrality, start an uptrend. So in here, this was trying to maintain a bullish market that it failed, thus became bearish. And then an attempt to neutralize the situation, but it kind of did and didn't. Did because, I mean, it did go sort of sideways, but then this downtrend kept it going. Then an attempt here to get it going, neutralize it. Well, it did neutralize it, but it didn't get it going. Attempted here to get it going. It neutralized but didn't get it going, and then attempt to get it here, got it going. So right now we have an attempt to get it going again. And as it goes, previous test, you have test number 1, consolidation, what a consolidation one that it was, for how much it went down, for how long it went down, and then retest a previous high, and then we consolidate a area of where the previous resistance for it was, even above majority of the resistance, and for how long it took and how much it was shorter, it was not as much. And there's a lot of good reason for me to believe, what I've been saying for quite some time, I feel this is weak resistance on a move up to the previous 50 level. And I define weak resistance as something that might not be resistance, but if it is, be weak in that it doesn't resist for that large of a price. So maybe it comes back to like 28 or 25, 26. And a 2x move on the long term is not much of a move. Or maybe it just does even less than that. Maybe it just does some of this type of going sideways amongst previous high. And then if it's not, I'm expecting a clear, concise break north of it on the situation of when. And it's really a when, not a matter of if, it's a matter of when. When it has this significant break, it's going to be significant. It's going to be historic, literally historic. As 2020 is going to be a historic year, something that will be talked about in textbooks forever. Just one of those big topics like the Titanic and the Boston Tea Party and the 1993 Stanley Cup Finals. Okay, maybe I'm a bit sarcastic and a little bit biased as my love of my favorite finals ever. And we're going to get to sports in a bit. But before we do that, let's take a look at gold. Let's take a look at that of the ratio. But before we take a look at that, quickly on the yearly term time frame, and we'll go right to gold on the yearly term because it's a magnificent one. It's now at the upper end of the 18 average of highs. And if we start to see any noticeable breakout even further, this will be an attempt of exitation after several years of consolidation within the sideways band after a one leg, really much a 1 or 2 leg higher move, depending how you want to look at this. And boy, again, I'm expecting this next leg higher to be, well, relatively decent. So let's go ahead and find gold, GCI1. 1,866. And Canadian dollar terms, silver's at $30.64. Gold at 2,504 Canadian. So just beautiful exitation. Now we're at that level of weak resistance. At the previous high of 1920, it only has to go up an additional 50 some odd points. That's about 3 percentiles from here. Pretty much nothing at all. It's just been just beautiful how it's leaving such. And I'm going to go through these ranges very, very quickly. Quarterly term time frame, just continuous green candles up as we are now at 1, 2, 3, 4, 5. It's most likely going to be an up quarter. 7 quarters up in a row, but I gotta say most likely because we're not even 1/3 through it. We're the first month of quarter 3. On the monthly term chart, just a lot of great, amazing action as the exitation of the 18 occurred in June of last year. And we've seen it leave at around $13.50 or so. It's up about $500 or that of about 30 or so percent. On the weekly chart, just continuing to move on. And to me, not really overextended amongst the 18 average of highs because we had all this consolidation, leaving it here. Pretty much this statement, leaving it on the June 22 stamp, and we continue to do so on low volatility. Now we're increasing this one on high volatility. So now it looks like this is a breakout period. On the daily term time frame, this is day number 2 of the breakout. As we got this level of resistance here, supported for all these days for the most part, and now we're breaking the levels of that we resisted, which was first in at 1796, then it again at 1805, and then again at about 1829. Currently standing, of course, at 1866. Triple hour term time frame like gold or silver rather, having a fantastic move. And nice bullish strength showing me that this move is not over. And very, very strong setup still showing in place for at least another leg higher on the single hour term time frame. The ratio is next. It's like 80-1 now. After it was like 125. Okay. I haven't even needed to upgrade my features at all. I don't get any advertisements on there. I don't know if it's because of my Brave browser or what's going on, but I had my package on TradingView and it expired for the yearly membership and wasn't too happy with the prices. I mean, okay, maybe I'll wait and barter meaning they oftentimes have passed giving me good prices. But I haven't got any advertisements, so I kind of don't really need to do it because I thought maybe they do intentionally make it so bad to force you if you want the service to pay for it. Anyway, as far as the gold, this is gold futures. Gold to silver ratio. There we have it. 81.56. And on the daily chart, 3 days ago, down 2.5. Yesterday, down 5 1/3. Today, 5 2/3. That's about 12 or so, 13%. And well, for the week, it's down 12.9 Failed move, fast move. Do we see that possibility in here by chance? Well, we had this last breakout going north of 92 to 1.25. And now it has this consolidation phase within this. It obviously didn't support the 18 lows. We can see it didn't support where it came from, which was betweening, well, it did originally sort of here, but I mean, it didn't do it that well. But that's betweening 93 down to about like 86 and change, of course, 81, so down about 6% since the lower end of that. Now a retest of this support, of this resistance. And you can use longer term time frames in helping you get a gist of what these levels mean, because yeah, on the daily this thing is capitulating to the downside, if you want to use that word. It's just well overextended to the downside, and who knows how much more this could go. This could stay overextended till it goes down to 70 or 60 on the next shot move, meaning Friday. Not saying it's going to happen, but the odds on probability for this go down 15% in the next 2, 4, 5-ish or so days is higher than normal, because of the current technical analysis and how the movement is going on right now. So as it goes, we can see again that this 18 didn't hold. I'm going to presume that now if we go the monthly, are we going to have problems because the monthly might be around here? Well, yeah, that's what's happening. Now it might hold and stay within it. We can see that it is a failure in supporting this 18 average of lows right now, really showing emphasis on this possible failed break. But this general area here is where we can start to see. Let me just take a look at this on the hourly chart, and I'm seeing this for the first time this way. Yeah, when it came down to it at 11 o'clock last night, consolidating within that area, and then since then it's just lost that point. So yeah, so the monthly chart not finding the bit there. So quarterly we got to be thinking yippers that we're finding this key level of support. But as it goes, it does bring us to this very interesting level. For the amount of resistance that it has had in here, this millennium, well, 1, 2, 3, and 4. And then even 5 breakout point. And it had this breakout, so are we talking about a failed move? So normally this is a pattern of either or. And it's a big one either way. Either it's that attempt to have a significant clear break. And this move here is a noticeably okay move, but not that huge when you figure this low, even the low at 16 below it, to this high. So if it's establishing a level of resistance to the higher level, go to like 160, 180, and I don't think that's going to be the case, but just saying if it is, that you would have your move, maybe come back to where you came from, and then you're going to be talking about weak support on the or resistance in this case on the way back, and thus you'd be making it to that point. But you could be talking about this being a failed breakout. So if it fails to find support, really this must, I'm not going to say it's a must area, but I kind of am, because I know one must area is a 61.8% from here and all that. But it does mean that if you start to see how this goes weak, that you could have a fast move down to here. It would not be a surprise, because just in technical analysis, we have this failed breakout, and then your comeback move fails really bad. And that this continuation move would just be to be expected because of it. And yeah, anyway, that is the gold to silver ratio. Let me bring up baseball. And I'm going to go through a baseball pick, and it's over the total. Betweening, this is preseason, so that's today's action. Seattle Mariners versus the Houston Astros, with even an opinion play on the money line for Seattle. Just a big price. Marco Gonzalez starting for the Seattle Mariners, and Justin Verlander starting for the Houston Astros. We got sports coming back: baseball, basketball, and hockey. Very, very important for me. That's my business these days, is investing in sports. And I'm going to go from January, February, and the start of March to not really being that busy, but really I'm still able to get enough volume in. I could bet $100 a day, which isn't that much, but it's something. At least for me, I could be and I should be betting more. And that's because all I could do was have one major advantage game per day on average, and that's what usually the maximum stakes were. was about that. And now, even before then, through like April, May, there's like nothing available. So I basically withdrew to like the lowest I could have to build easily, which was several hundreds. And I've turned several hundreds to over 1,000 just by playing video games, fantasy, golf, and soccer, and all those games. And now baseball, hockey is coming back, and I know how to figure out how to win basketball. Meaning I know how to figure out what to do. Whether I'll figure it out, probably. But I got to figure out how metagames are going to change. And a lot of times they're going to, and there's a lot of things that are different. We got all these bubble states. It's almost like sports to a degree. Not so much as baseball, but even a bit, yeah. But definitely so much, definitely that of basketball and hockey. How they're bubble hub city states. And I'm seeing a bit of it with Major League Soccer right now. And I've been watching a decent amount of Major League Soccer lately. It's at the stage where it's just, I'm kind of wondering, first of all, will there be players that are normally at a certain level of statistics that are going to be 20, 30, 40% worse or better because of conditioning and either being good or bad? I'm expecting there to be a decent amount of that in the sports, but I'm not going to reflect that to this over-under. But metagames for baseball, for totals, I do not think you should be looking to play under the total for the first few weeks of the season. If so, if you just got to fade the pitchers, or play the pitchers rather, or play on the starters and fade the hitters, do so for the first 5 innings under maybe. And here's the reasons why the meta's changing and how this affects the over-under. First of all, in National League games, and this is not a National League game, this is an American League game, but like Pittsburgh versus St. Louis, who's hitting ninth? I can tell you it's not going to be. It's not going to be Musgrove and Flaherty. Pitchers don't hit anymore. So now you're replacing a shitty hitter with a pretty decent hitter probably. So that's going to be an advantage for runs right there. But that's only a small one. That's the worst of the ones that I'm looking for why I'd like the over-unders to go up. The second one of 3 is the overtime rule. How overtime's going to work in baseball now is when the 10th inning begins, the person who was the last to get out or the last person at bat in the previous inning will start the next inning at second base. Statistically, it will not hurt the pitchers for earned runs, for that hitter at least, but it will definitely have more runs. So now have fun with your 3-3, 7.5 games going into the 9th and your 4-4 games when the total's 9.5. When you go into the 10th inning and 9th inning and stuff like that. Because, yeah, when they can very easily see runs on both sides of the 10th inning. And even 11th if it gets to it, I suppose. So that's going to create extra runs there. But the biggest reason is because of the rule that a pitcher is forced to face 3 batters or finish the inning before they're allowed to leave the game, other than injury. So this is going to reduce your pitcher versus hitter matchups, which is basically favoring the pitchers. Thus, you're putting a lefty or righty in for just 1 batter. There's not going to be any more of that. So because of that, that's going to be giving a little bit of advantage for hitters versus the pitchers as well. And now hitters versus pitchers. The Seattle hitters against Justin Verlander have done very, very well. Again, another reason I like Seattle on the money line as well too. Plus 235. Not a big fan of it, of the money line. I'm a big fan of the over 7.5. But yeah, Seattle hitters. There's a whole bunch of them, 4 or 5 of them that have got very good statistics in their career against Justin Verlander. But on the other side of the fence, there's a whole bunch of Houston Astros that do very well against Marco Gonzalez as well. So both of these starting pitchers have struggled against the hitters that they should be facing on the matchup come Friday night at 9:10 p.m. Eastern Time. I'm not going to bet the over because my profit is playing fantasy. Whether it be baseball, I expect a very, very high return on investment on baseball. I'm expecting the same thing in that on hockey as well. So I will be playing those hitters in fantasy baseball accordingly. And very little action within those pitchers of Marco Gonzalez and Justin Verlander. another pitcher that I do like in tomorrow's game, and this game as well, that does very well against his opponents. Let me just try to find again. Where is that gentleman? Okay, Musgrove versus Flaherty. TB determined versus Madison Baumgartner. God, Baumgartner's on Arizona now. Holy crap! This is guy who's I mean, he probably hates the fact that he's not allowed to hit anymore because he's a damn good hitter. Andrew Heaney, that's the guy. Andrew Heaney. He has dominated those Oakland hitters, actually. He's got a good matchup there. I don't know who's starting yet for Oakland, but they're already favored at minus 146. So I'm going to put an opinion play here on the LA Angels at plus 134. And if you want to have some fun, and you can find a minus 1.5 on the Angels, I love laying a 1.5 on road teams. And I'm not as big a fan of doing it on the home teams. And the reason for that is because when the game goes to the 9th and 10th inning and it's tied, yeah, good luck winning by 2 with the home team. It can be done. 1993 World Series of baseball. Joe Carter hits a 3-run home run and the Blue Jays win by 2. It happens. And that's the only way it happens, is if there's a home run with men on base enough to make the deficit or the margin be 2 or more, where the road team can just continue a rally going. So it's 4-4, maybe it's 5-4, then 6-4 and 8-4, and that's just going to help you along on the run line as is. Now, with that being said, though, Vegas odds do reflect the home and road team. I have noticed that a little bit, but that's basically what I like to do. And with that being said, too, at the same time, I also like to take a 1.5 with the road team as well when they are playing against the if I think they're a good cover. So let's say a situation here, I could take the Los Angeles Angels plus a 1.5 and lay like a minus 170 price or minus 180 or minus 190 price even. Play a sick price. But, I mean, there's going to be a decent amount of outcomes that Oakland wins by 1. Of course, with that being said, now that there's a man on second to start the bottom of the 9th inning or 10th inning off maybe, or 10th inning I should say, not 9th. But if there's a man on the bottom of, or a man on second and this game is tied in the bottom of the 10th, I mean, everyone's swing away from winning by 2. And this video is going a little long, not quite 30 minutes. So I got everything off that I wanted to, I told everything that I wanted to state, the silver charts, the gold, the fact that I got my silver, which is magnificent. And I don't know why. I mean, it said signature required, and I've signed for silver about 15 times in my life, but not this time. Yeah. Anyway, take care. Bye-bye.